Welcome back to Tax Talk by TNC Sridhar, the place where we decode tax the simplest way possible. Today's episode is about the topic that confuses almost every taxpayer: gift tax and its implications. Can you receive money from friends or property gifted taxable? What if someone gives you gold or cash at a wedding? What is exempt and what gets taxed? All of this explained clearly in just 10 minutes. Let's begin. Let's start with first things first. There's no separate gift tax act in India today. Gift tax was abolished in 1998, but gifts are still taxable under the Income Tax Act under section 56(2)(10). This means whenever you receive a gift in cash, in check, in property, in gold, jewelry, or any movable or immovable property, it may become taxable in your hand as the income tax from other sources. So yes, gifts can be taxed depending upon who gave it, what was given, and how much was given. The next area we start off is who can give you a tax-free gift. This is very important because most viewers misunderstood this rule. Gift received from relatives are always exempt, no matter the amount. The Income Tax Act defines a relative as spouse, brothers, sisters, spouse, brothers, sisters of parents, that is uncles and aunties. Any lineal ascendant and lineal descendants, that is the parents, grandparents, children, grandchildren, and spouse of these relatives. Suppose a gift is received from father to 10 lakhs, that will be tax free because he is your lineal ascendant. And then a gift of rupees 25 property from your brother, tax free because he is your blood brother. 5 lakhs from your cousin, no, not a relative, taxable if above 50,000. Because those relations that is specified under the Income Tax Act have to be kept in mind. Remember, cousins are not considered relatives under the Income Tax Act. Now coming to this 50,000 rule, let's address the most common confusion. If you receive a gift from a non-relative, the total value of the gift in 1 year exceeds 50,000, then the entire amount becomes taxable, not just the amount above 50,000. That is the total cumulative gift that you receive in a year from 1st April to 31st March. That becomes relevant. Suppose you have received 40,000 from a friend, won't be taxable. Suppose you receive 55,000 from a colleague, you don't get the benefit of no tax on 50,000. You have to get the entire 55,000 is considered as income from other sources. Now you receive 20,000 from one friend, 40,000 from another. The combined gift crosses 50,000. That is 60,000 here. So the entire 60,000 will be taxable under the income from other sources. This applies to cash, property, jewelry, car, any asset with monetary value. Now we talked of the gifts received from specific persons. Now we talk about gifts from special occasions. They are the beautiful moments of your life where gifts come naturally and the income tax department respects it. Gift received on the following are fully exempt even if they come from non-relatives. Occasion of wedding, inheritance, gift received due to death of a payer, gift received through specific agreement legally. Then property, gift and stamp duty values. The property gifting is another area where mistakes happen. Let's simplify this. When you receive a property, land, house or flat as a gift, and if the stamp duty value exceeds 50,000, stamp duty value means the value that is accepted by the registrar at the time of registration of the document. And it is from a non-relative. Then the entire stamp duty value becomes taxable. For example, if the stamp duty is at 1%, and you have made an agreement, or the value determined by the thing, whatever you hold it is, suppose 40 lakhs or 40,000, whatever it is. But the registrar while registering takes the guideline value. The guideline value becomes the criteria. It can be more than that. It can't be less than that. Suppose you say an amount to be taken property is say 40,000 and the guideline value is 60,000. So the value will be taken as 60,000. Now suppose the guideline value is 40,000, but you made an agreement for 60,000. Then the higher value will be taken. This will be the criteria which will determine the value of the property. And if it is from non-relatives, then the entire stamp duty value becomes taxable. But if you get it from a relative, it becomes tax-free. For movable assets like jewelry, car, paintings, etc., tax applies if the total value exceeds rupees 50,000. These are also not individual, total year. In a year, how much you receive, that becomes very relevant. There is a common doubt. Suppose I give a gift to someone, do I have to pay tax? As a giver, whether I am liable to pay tax? No. Giver never pays tax. Is only given the gift. Receiver may have to pay tax based on the rules as we discussed. So the tax burden is always on the recipient. Now coming to the documentation of the gifts. To avoid future disputes with the income tax department, maintain proper documentation of the big gifts. Gift deeds registered for property gifts, and bank transfer proof, identity proof, relationship proof if claiming relatives exemption, occasion proof like wedding invitation, etc. Proper documentation, if you make it, there will be no tax issues. After abolition of the gift tax in 1998, there was no mechanism where the gift channel was being misused by people. There were instances where people were converting their black money into white through gift channel because gifts were not taxable. So when this took a rampant, then the government thought of somehow dealing with this matter. So then this section was brought in, 56(2)(10), wherein it said the tax will be done under the Income Tax Act in the hand of the recipient. So anybody who is receiving that gift, that is if somebody using the gift as a channel to bring back their ill-gotten wealth into a legal channel, this particular thing was brought in. So the taxation of the I won't use the word gift tax, it's a taxation of the gift on this particular area. That is why you pay the full tax as income from other sources accordingly, and it becomes your money. So to summarize, gifts from relatives are tax-free. Gifts from non-relatives above 50,000 are taxable. Wedding gifts, inheritance and death-related gifts are exempt, and gifts are taxed in the hand of the receiver. Property gifts follow stamp duty value rules. In the next episode, we'll continue this topic, but from a different angle. We'll discuss the tax on donations. We get exemptions, how much deduction you can claim under Section 80G, which organizations qualify, and how to avoid fake donation scams. So don't miss it. If you found this episode helpful, do like, share and subscribe to Tax Talk by TNC Sridhar, your weekly simple guide to understanding taxes. See you next Thursday at 12:30 p.m. Until then, stay aware, stay tax smart.